Hello and welcome to our outlook on global markets this week. It's only a week or so till Christmas, hence the Christmas tree. But you know what? Out there in the markets, it's really not beginning to feel a lot like Christmas. We've seen a continued decline in global stock markets. Bond markets remain very weak for corporate bond spreads, although government bonds have done rather better, and we've still got enormous uncertainty across markets, and these have been sparked by a number of issues. But I think the key thing we can say about markets 2 weeks before Christmas is that they lack any kind of resilience, and that's a bad thing. Normally at this time of year, markets are unwinding, preparing for a big move or a lot of activity in January, the start of the financial or the market's year. That doesn't feel like it's going to happen this year. We've got so much uncertainty out there. It looks like people are going to come back into markets that remain fractured, roiling and difficult in January. But let's think about the main things that are affecting us just now. Number one is trade wars stroke tech war. And by that I mean the arrest of a senior Huawei executive, the daughter of the founder who is CFO of the company, last week, even as Xi and Trump were talking at the G20 summit. That confirms what we've long feared, that not only do we have a trade war likely between the US and China, but we now have a tech war where we're going to see the world increasingly divided into people using US-led technology, which of course is all made in China, and Chinese-led technology. This is going to be enormously difficult for markets to factor in coming months. The next issues we need to consider are, of course, all the other market-driven events, such as what is the Fed likely to do this week? It's very likely they will continue to hike rates, despite the fact that inflation and jobs growth in the US has slowed. The reason they'll continue is to continue the preemptive stance. But it does look likely that if we see the numbers continue to deteriorate, that perhaps the pace of Fed tightening next year will slow. And this all highlights a growing sense amongst investors that perhaps we face recession in 2019. If you were to take a look at the latest numbers out of China, they are certainly showing that China is being damaged by the existing tariffs that Trump has imposed upon them. And if we see more tariffs imposed early next year, that's going to further bring down Chinese activity, which will spread around the rest of the planet. The other big news, of course, we have this week is the UK, the Brexit vote. It is now looking increasingly likely that Theresa May will not be able to get the majority that she requires to pass the current deal, which means we're going to end up back at the negotiating table. That doesn't mean the Europeans are going to be sitting opposite the UK. They've said this is the deal we get and we're not getting anything else. It feels like the whole Brexit negotiation is going to drag on, and that's a big negative for UK markets, where the uncertainty that Brexit has engendered has caused a slide across all assets, from bonds, from stocks, and in the housing market, which is so critical to the economic sentiment in the UK. In Europe, we face a whole series of other issues. The most glaringly obvious one is what's been going on in France with the yellow vest protests. Macron will attempt to address the nation and try and calm some of the fears that French protesters have raised. But what we're seeing there is going to be replicated across the whole of Europe as we see the run-up to the European elections in May. It is very likely that we'll end up with a whole series of populist candidates elected, and that is going to change the whole nature of the European Parliament and the relations with other countries. So we are at a very difficult and tortured, fractious period in markets, which isn't the right way to be going into Christmas. Let's see what happens next week.